Today we're going to talk about something that is going to happen in the market. Now I don't know when, but what I can tell you is at some point the stock market is going to drop. Now, I know if you've watched my past videos, we talk about there are no facts about the future. Why are we predicting a market drop? And the reason that we're talking about that with certainty the market is going to drop because it is inevitable. The market makes its onward march upwards, but there are drops every single year, right? And we're going to talk about a chart that's going to put this in context and hopefully make these drops, because they are so common, it's important that we get comfortable with them and help them understand that they are part of the process as long-term investors. So let's dig in. This chart here, you might have seen it before because I've talked about it in different ways, but we're going to look at it in the context of the inevitable drop that happens as long-term investors. So this goes back into the 80s. So we have 40 years worth of information here, and as you can see, these top bars are the end return, right? So these gray bars is the return at the end of the year, and these red dots are the drop that has happened every single year from the market high. And so if you look at each one of these, at no point is there not a drop from some point in the market. So the drop happens all the time. It is inevitable. If there were no drop in the market forever, what it means is the market hit a new high every single day forever. And we know that's not going to happen. So therefore, the drop will happen. How common are drops? What do they look like? How should we think about them as long-term investors? Okay, going back to this chart. Well, if we just look at the facts, we know that drops happen every year, but let's get a little more specific on what these facts look like. So on average, from 1980 to mid-2020s, where we are now, which has been a pretty good time in the market. The average market rate of return has been around 10%. Things have been pretty good. We have seen an average of a 14% decline in the market every single year. So if you look at all these dots heading down, on average, it's 14% a year. So what does that mean? It means that if we had a 14% drop from where the market is today, that would be average. And so what does that mean? Half the time, it's going to be worse than that. And again, that is the price we pay for being a long-term stock market investor, and getting the rates of return that the stock market delivers over time is we got to deal with the drops. It's just part of it. Now, looking at this chart, the market goes up 33 out of the last 44 years. It doesn't mean the next 44 years are going to be the same, but if you look back over history, even about 100 years, it goes up about 3/4 of the time. So 75% of the time, you're going to have a positive kind of January to December kind of experience. But as you know, if you've ever been in the stock market, that the market can fluctuate during that time period. And so you're going to have news outlets talking about the market's hitting all-time highs, or they're plunging, and all those different types of headlines. And they were all designed you to get to watch the news, not necessarily to be better investors. And so sometimes it's just important to be armed with the facts, which are the stock market delivers solid returns over time. The stock market drops every single year. Because if it didn't, it would mean it's just hitting an all-time high forever, and we know it can't do that. And so we know the average is down 14%. That should be what we should expect every single year on average. Sometimes it's less, sometimes it's more, and all that's okay. If anything, maybe we look at those drops and say, is this a buying opportunity? But as long as you're leaning into it rather than saying, should we make decisions? Should we be exiting and panicking? Then the long-term feel of being a stock market investor can be much more comfortable. And more importantly, as I always say, it's important to know what you own and why you own it. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.